It is Tuesday, May the 20th, 2025, and this is Worldwide Exchange on CNBC and streaming on CNBC Plus. All right, welcome back to Worldwide Exchange. 30-year fixed-rate mortgages hovering just a tick below 7% right now, their highest since mid-April, following the 30-year Treasury yield's sharp pop to 5% yesterday. The rest of the curve, including the 10-year, which is tied directly to mortgage rates, also moving higher yesterday. The higher rates coming in the middle of the critical spring selling season, adding yet another headwind to the U.S. housing market that's seen pending home sales drop more than 3% last month from a year ago. Home builder sentiment also at its lowest level since the end of 2023. Joining me now on this and much more is Bess Freedman, CEO of the real estate company Brown Harris Stevens. Good morning. Thank you for joining us again.
Good morning. Thanks for having me.
All right. So how big of a deal is this to see the mortgage rates just tick above 7% during the middle of the spring selling season? Is this really the time when people are out there trying to buy houses, or have some of these higher rates kind of disrupted those trends?
Yeah, this is certainly a disruption. It's unhelpful. It's been a slow start to this selling season. We were hoping that it would be much busier. It's decent. We're doing better. The numbers are better than last year, but remember, last year was not a good year in housing. And I think the trade war is certainly throwing things off. Uncertainty is, in the economy right now. And I don't see the Fed doing anything until there's resolve with this trade war. And rates are so important to the home buying process. And even for sellers and for buyers, people are waiting it out more than they normally would, and so that's slowing things down, which is not a good thing.
So you're saying it's slowing things down. Redfin came out with a report yesterday I thought was really fascinating. So according to their data, we're seeing the most active U.S. home listings since March of 2020. We all know what happened in March of 2020, the pandemic, and then people kind of rushed out to buy houses. What is that telling us about the current housing market right now, that we seem to kind of gotten back to where we were right before the pandemic?
Yeah, there has been a buildup. People are out there, and remember from the last quarter, the sentiment has been good, but we're starting to feel consumer confidence slow down. But we did see a glut of inventory come on the market, which was a good thing. People were willing to list and sell. What I do think that means is that sellers and buyers are starting to understand and recognize that the rates that were 2% and 3% are gone. Those days are over. Now they have wrapped their heads around the fact that the 5%, 6%, 7% is where mortgage rates are going to be for some time. And hopefully they don't go up further. So I think people are recognizing that, and people who need to sell are selling. But I wish it was a little bit busier than we were hoping for.
Yeah, I think every real estate agent hopes that as well. When we're talking about those 7% mortgage rates right now, who is that impacting the most? Is that impacting high-end people as well as first-time buyers? Because I would imagine first-time buyers, it's really a struggle. When we're talking about the higher-end consumer that's still, getting a mortgage, are they equally as impacted right now when we're talking about these 7% potentially mortgages?
I think it has probably the most profound impact on first-time home buyers. And they're having a harder time now than ever before in buying their first-time home because rates are higher. Inventory is scarce. There's not as much to choose from, and prices have not come down as much as we would like to see. So I think that's creating a lot of trepidation and wait. But people who are bigger spenders or discretionary, as we say, are more flexible when it comes to that, and first-time home buyers also need to build up credit to be able to get a loan to buy their first-time home. So I think it has a heavier impact on the first-time home buyer. And as we're seeing also, Frank, the first-time home buyer is older now than they have been in a long time. They're close to 40 years old. 10 years ago, they were 28 years old.
Wow.
And we have to pay attention to that. It's still the American dream, and we want to see people out there buying their first-time home.
That's a completely different profile of a first-time buyer, from 28 all the way to almost 40. That's an incredible change. Bess, one last question for you. We're talking about the administration's policies when it comes to tariffs and also immigration. What are you hearing from home builders and people that are, building homes and supplying building materials? I'm sure you have your finger on the pulse of this. You mentioned inventory before. As we look a year out or even further out when we're talking about inventory, do you expect that to continue to build when we're talking about new homes, or has that supply chain been disrupted? Has that labor flow been disrupted significantly?
I think it's slowed down. I think there's a lot of pencils down because, look, materials are more expensive. They're going to be. People are waiting, scratching their heads. They want to know what costs will be, and they're ticking up. So I think that has put a pause on a lot of people who are thinking about or wanting to build because it's just so much more expensive. They have to decide whether it will make sense. So I think that's going to take some time to sort itself out until we know what these costs are going to be, and then they can make decisions as to what to do.
All right, Bess Freedman, always a pleasure to have you with us.
Thanks
Thank
so
you again.
much.
Have a great day.